Hey everyone, Alan Brochstein from 420 Investor and New Cannabis Ventures here with your weekly update on the cannabis market, where I preview what's going into our newsletter tomorrow at New Cannabis Ventures. Before that, though, this was yet another challenging week for the market. We actually came into Friday pretty much unchanged for the week, which was surprising, but an overall weak market on Friday allowed us to have yet our third straight week down. So the index is now down about 22.6% year to date. That's the global cannabis stock index. So it's been a rough start to 2022 after a pretty rough 2021. In terms of the news flow last week, we kind of took a little bit of a respite from earnings season. So the declines that we saw maybe were a little bit of settling in of some of the ideas that came out in the Curaleaf and GTI call from the week before, i.e. Perhaps a little bit less revenue and tighter margins in 2022 than previously expected. So taking a look at the news, and again, we have curated press releases as well as our own proprietary content. Those curated press releases tend to be around financial reports, M&A, and capital raising. And so just hitting in alphabetical order those curated press releases. The first one was a financial report from Acreage. Recall a couple of weeks ago we interviewed their CEO, Peter Caldini. I think I said on this video, it's too bad they're tethered to Canopy Growth. They seem to be turning things around. So they reported revenue up 21%. About half of that was due to consolidating Ohio. It's kind of a tricky thing. It's something that we had to deal with Columbia Care and Curaleaf. There were a lot of these managed services contracts until the companies were able to close. So it wasn't really a 21% sequential growth, but literally it was 21% sequential growth in their reported revenue. But they were profitable, certainly demonstrated the turnaround's intact. So nice to see. Another financial report came from Ascend, and they had already warned that Q4 was not going to be very good, and they met the expectations, so that part was good. And they didn't give specific guidance for 2022, but they talked about the cadence of the quarterly revenue over the next few months and the timing in New Jersey and all that. And so clearly the analysts were a little bit disappointed there in terms of, they took their numbers down a little bit. The third one was a pre-announcement out of Green Lane. There was a lot to unpack, but on the financial side, the revenue and adjusted EBITDA are pretty much in line with what was expected of the company. They also announced a management change or two and addressed the liquidity situation, i.e. they took on some debt late in 2021 that's due at the end of June, and I'm sure they could probably extend that debt. It's not really the issue, but the company does need to raise some capital, it would appear, and the press release detailed how they could raise up to $30 million without issuing stock. Another one was a pre-announcement as well. I Am Cannabis, which is a Canadian company, Canadian listed company operating in Israel, Canada, and Germany, and they pre-announced a 37% sequential gain in Q4 revenue to 20 million Canadian roughly, and that's not all organic, but nice jump there. Another one was a pre-announcement as well of sorts. Scott's Miracle-Gro was attending, I think, the Raymond James conference, if I'm not mistaken, but no, Roth, I don't even remember. They were attending a conference, and they put out a pre-announcement before they spoke at the conference, and it's pretty disappointing. They'd already taken their numbers down for their Hawthorne unit, but it's even worse than they said. On their earnings call in February, they had said that sales had stabilized, and while this remains true, they took down their guidance for the full year. They're now expecting a decline of 15 to 25%, and that's a big drop, but it's also worse than it sounds because they did some M&A, so on an organic basis, it's worse. And it's going to weigh on obviously on the overall company's revenue. They did say that they expect to do $8 per share in EPS, Scotts Miracle-Gro, the whole company, for the fiscal year ending in September. Stock ended up trading down to a new 52-week low on that news. And obviously that has implications for some of the other equipment makers in the space. And then the final one was an M&A. M&A. Terracin closed its Michigan acquisition of Gage. It was an all-stock deal, similar to what I said either last week or the week before. Planet 13, all-stock deal. California, this was an all-stock deal in Michigan. And we've talked about this in our newsletters before. These single-state operators are a lot easier to acquire. They don't have to be publicly traded. In this case, they were. But we expect to see more of this type of M&A, single-state acquisitions by publicly traded companies, but probably more often of private companies, not necessarily these publicly traded stocks, but there probably are a few of those as well. As I mentioned, we also have our own proprietary content. This tends to be around market data updates, the interviews that we conduct, as well as the reviews of our proprietary indices and our revenue tracker, which I do plan to write a revenue tracker update this weekend to be published on Monday, I would imagine. But this week we had just one interview, and that was with the CEO of Wild. And I know Wild. I've been to Oregon and had their products, but I didn't really know the company. It was a very interesting interview. Wild is a little quieter, perhaps, or not as visible in the media as its nearest competitors, which I also like, Wana and Kiva. But this was an interesting discussion. So Wana, we know, just sold out to Canopy Growth for a lot of money. So I have never seen the information that he shared with us regarding their revenue and revenue expectations. But it was a great interview with the CEO and co-founder of Wild, which is exclusively a gummies. I'm trying to remember. They're not going to be just gummies anymore, but they've been just a gummies, wildly successful, pun intended. And so then the other two that we ran were on state market updates, and I have to say, good news. January was a complete disaster across the country and actually across the continent, right? Canada saw a meltdown in its sales in January, and in every single state the BDSA covers, sales were down a lot in January versus December, something I've talked about before. So we all know February has 28 days, January 31. So you would expect the numbers to actually be down, all things equal, unless growth is really, really high. So the way I like to look at it is to look at the year-over-year growth rates and see how they change. And so Illinois reported 29% growth in its overall cannabis sales. That includes medical, which is in decline, and medical decline kind of in line with the number of days decline. It's about 10% fewer. So you'd expect it to go down, and you really would expect medical's not growing in any state where there's adult use. So that part wasn't concerning at all, that little decline. In the adult use market, the year-over-year growth expanded to, I believe, 41%. I'm not looking at it right now. But it was, so it picked up compared to January and, compared to February, while the sales, I think they were down just a little bit. Again, there's 10% less time during the month. So that was positive. Even better was Michigan, in my view. And I'm not remembering all those numbers specifically, but it was actually a slightly better report in terms of the actual growth rate and in the way February looked compared to January. I'll just throw it out there, something I've shared with my subscribers at 420 Investor. Massachusetts, which we don't publish an article on it, but their February numbers were actually above January for adult use, and I think similar, maybe slightly down, but better than the number of days. And that growth rate picked up as well. And I also looked at the first 6 days. They put out their revenue data weekly, and it's on a little bit of a lag, but it looks like March is shaping up to be very strong. So nice to see these early signs of, after a weak start to 2022 in terms of cannabis growth in sales, looking a little bit better now. So with that, I'll wrap up by just talking about the featured piece that we include. New Cannabis Ventures doesn't really editorialize a lot. We don't tell people what stocks to buy or We don't really tell you what we think about these companies much, and even in the newsletter, I don't really do that too much. But we do like to share some insight with our readers. And this week we talked about some news this week out in New York. And New York is obviously going to be a very important cannabis market. And coming into this week, the thinking was that they would launch in 2023. And now it looks like they may launch in 2022, which is positive in and of itself, if you ask me. I think that there's a double whammy to New Jersey and New York going legal. Not only does it inject revenue into the MSOs that operate in those states, but I think this is going to capture some media attention. Recall when Colorado went legal at the beginning of 2014, the whole world got excited. And then when California went legal 4 years later, it wasn't quite as exciting as Colorado, but it was really exciting. There hasn't really been a launch since then that attracted a lot of attention. But we're talking about the New York City metropolitan area now, a big change for the people who live there, being able to just walk into a retail store and buy. So what we talked about this week was some people may have perceived this negatively. These states, when they launch these programs, they have a lot of things that they need to take into account. The New York program is, not surprisingly, very progressive. We've seen a lot of states really fail at what they call social equity options. And what they're trying to do at the state level is to take into account that certain people, certain types of people have been disproportionately hurt by the war on drugs, and to give them a little bit of an advantage. And in the case of New York, this looks pretty amazing what they're doing. They're allowing people with prior criminal marijuana-related convictions to have a head start. And so I'm sure a lot of people are viewing this negative, like, this isn't fair to the existing operators. But I have to say, the existing operators, there's 10 of them, most of them are public, got a great deal in New York, as I detail in the piece. I'm not going to go over that now. But the existing operators got a great deal in New York. If you don't believe me, then just call up Verano and ask them why they bought Goodness Growth. If you don't believe me, call up Medman and find out why they're trying to get out of their deal with Ascend. So enough said, I believe. But so while it is true that these companies won't be able to have their stores open on day one, day one's coming earlier, and that is good for these companies, and really in two regards. First of all, they'll be able to recognize sales earlier. But I think the more important piece of this is, as we talk about in the piece, one of the biggest stumbling blocks to initial success when a state rolls out an adult use program is there just aren't enough stores open. And this looks to nip that in the bud. So kudos to New York for not only coming out with a progressive plan that will actually help people. It's not to the detriment of the existing operators. I think people are, some of the commentary I saw was really off base in this regard. It could have been better. They could have let them go at the same time too, but they didn't. It's not a big deal. 30 stores that'll open a little bit later, they will open, and New York's it's a great market for these existing operators. There are going to be a lot of retailers, a lot, and that bodes very well for those that have grows already. We'll see how many more grows come online, but these guys do have a head start on the supply of flower and derivative products, and the market structure is very favorable. If you are one of 10 producers selling to hundreds of retailers, it's a much better situation than when there are just a ton of operators selling product and there's just a few buyers. Like, think about Canada, where the LPs, there's so many of them, and they sell to just a few provinces. That's who they sell to, the provinces. It is a terrible situation. New York, it's inverted. Just a few suppliers, at least initially, lots of retailers. So I would suggest looking at this as a huge positive that there are going to be more stores more quickly, and hence more revenue more quickly for the existing operators. So with that, I'll sign off, and I'll see you next week. Take care. Have a good one. And remember, it's spring forward. Take care.